Started trading pretty young, as you mentioned in the introduction. Started when I was 16, basically. So grew up in Liverpool and was watching documentaries on television about the markets. So this was like 1994, 95. And there was a lot of documentaries on TV about Thatcher's Britain and how lots of guys in the city were making lots of money. So I was watching these documentaries thinking I could do it because I'm clever than these guys. So literally opened a trading account with a local stockbroker in the north of England. And back then it was all physical stock. So you couldn't leverage or borrow money to trade. So it was one-for-one cash trading in physical shares, and really got into the IPO situations where you could buy stocks in the morning where you put in for the IPO allocation a few weeks earlier. You get the IPO allocation and without even paying for it, and then you can flip the IPO like at lunchtime if it goes up, 50, 100%. Because it was all T+3 settlement. So you used to have to send a check to the stockbroker and then it'd be settled in 3 days. So you were able to flip IPOs and not actually pay for them. So really got into it that way.
Okay, and you continued trading at university?
Yeah, so at university, it was 97 to 2000. So I was pretty lucky. I caught the tech bull market, the tech boom. So flipping IPOs and trading IPOs was actually really straightforward. And university day used to be get up at 6 a.m, do an hour's research, market would open at 8, put on my positions, go to lectures, lunchtime, go in the computer room, flip them. But most of it was already done over the telephone. So in my day, it wasn't so long ago, this was before broadband. So everything was dial-up, and at home it used to cost like £1 a minute to plug your internet in. So, and you used to only get quotes online, and when you pick up the telephone to trade, the quotes from the brokers would be totally different from what you see on the screen. So it was pretty slow, and spreads were really wide. So you had to trade very volatile situations, and then go home in the evening, do a bit of research, and do the same again the next day.
Was it that experience that got you into Goldman Sachs?
Pretty much, yeah. The Goldman Sachs situation was, typical situation where they come around on the milk round and do presentations. So obviously, first, second year university, you go to all of these, and you get to know all the companies. I'm sure here you have the same even today. The track record, which is just all of your trades that you've ever done and your performance and your risk over return. The track record, I basically told one of the traders on the desk at the presentations, the amount of money that I made at university, all the situations I was trading, and they were really interested. So I basically had a telephone interview the next day and emailed them my track record. So the telephone interview was with the head of the desk, and then I was invited down the next week to have interviews, and then offered the job on the same day, basically.
Okay. Do you think that method still applies for getting students into for us that want to follow in the same sort of path? Do you think that's the right way to go about getting a job, getting a trading job now?
One of the big problems with applying to investment banks, hedge funds, all financial institutions really, is a lot of the industries are in structural decline at the moment. So you're seeing investment banks culling tens of thousands of people in the Western world, hedge funds pulling back on hiring, the insurance industry pretty much the same. But the amount of applications has gone up exponentially in the last 10, 15 years. Everyone seems to have an undergraduate degree now. Everyone has a master's. So, differentiating yourself is really, really hard. Sure. In my day, the way I differentiated myself was by doing as well. And I think it still really applies. If you can show something on your resume and show something in your experience where you've actually applied real trading methodologies and used real money, you stand out in a huge way. Everybody's got an undergrad with a 2-1. Everyone's got a master's. When I used to see CVs, I used to hire a lot of people in the industry. Piles of CVs would drop on my desk from HR, and HR is really just a filtering process. They don't know what makes a good trader, but the people tick all the boxes, so the CVs end up on the desk. But there's thousands of them, and it's literally sometimes just taking them and going 2-1, masters, couple of good institutions that you went to, nothing really interesting about this person, bin. I mean, that sometimes that can be the process.
Okay, so you're already trading. Once you're at Goldman Sachs, how did they develop your ability?
Well, publicly, these companies are public companies, so they're always going to say that they have official training programs. It's something, public companies have to show their shareholders that they're being responsible in training the people that they hire. So you do have an official training program that you go on in New York, which is pretty much sitting in a lecture theatre like we're here now for a couple of months, but also you're given a seat on the trading floor on Wall Street. To be honest, what you learn in that situation is really about applied finance, more that you would learn in a master's, but also the culture of the firm. And you get to meet everybody and all the right people in the US office. So you don't really learn how to trade or learn about your profession in practice. That's when you come back on the desk, and really that's where you learn.
Okay. So you spent about 4 years at Goldman's. What were your highlights?
Highlights, well, walking onto the desk in the first week, where it's all hands to the pump because it was the tech boom. So this would have been June 2000, and where they just give you, it was crazy. So they just give you a pot of money. With me, it was $10 million to start. They say, learn how to trade. This guy next to you is going to teach you what to do. Press this button to buy, press this button to sell. And because it was the tech boom, it was every day walking in with pretty much very little experience, saying, right, we're going to give you some responsibility today. After a couple of weeks, you're going to IPO this company. And I'm like, okay, so I'm on the other side of the IPO now that I'm used to. And then next day doing a rights issue, raising capital for companies. Next day selling stakes in companies for large shareholders and pension funds. So yeah, the first couple of months was a real baptism of fire. I thought I knew stuff. I didn't know anything until I walked onto that floor. I guess big trading situations. There's so many, but ones that really stand out, probably during the tech boom, doing all the IPOs. 2001, September the 11th, huge situation in the market. The recessionary periods of 2002, and then the takeoff of the market in 03, 04.